Hi, this is Akmir with the weekend edition of the Bulletin Board Heroes. It is Sunday, the 7th of July. Starting on with the FTSE 100, which nearly made it through the 50-day line, the blue line there, 82.50, and the May resistance line, but we didn't get the end-of-day close back above that we wanted to. We're looking now for support around 81.30, which is the floor of that rising trend channel from the turn of the year, in fact, back in October. And below that, risks a move down to 8,000, but still hoping for, I suppose, a move up towards 8,300, which has been basically post-June resistance. But that end-of-day close above 82.50 could be a problem, especially as we closed the RSI back below 50 back on Friday. The DAX is next, and here the picture is that we managed to hit, or the market saw that May resistance line, unfortunately came back from it. Want to see this market stay above the floor of that rising trend channel from October. That's currently around 18,400 and above the 50-day line there. That's really key for the start of this week. RSI at 55, so that is in a good place to try and break the May resistance line and then obviously head up to the record highs. The Dow is next on the list, and here it's been a positive picture basically since around the 18th of June, where we broke above the 50-day moving average, currently around 38,900 in a definitive way. Got progress within that rising trend channel from back basically at the end of July last year, top of the channel there, 41,500. But in the meantime, quite a lot of resistance towards 39,000. We're expecting that to break given the positive candles that we've had over much of the last week, and also given the way that we've had multiple support points for the Dow above the floor of the channel and the 50-day line there, 38,900. RSI at 59, so it does suggest that we've got a bit more gas in the tank for a breakout and a move to 40,000 sometime later this month. Moving along to Bitcoin, which has been the sickly child in the recent past. We hit that support line projection from back in March, so 53,000. Looking for an end-of-day close back above both the 200-day line and the late June support there, 58,500. If we don't break back above that joint level, let's say, the next target would be February support just near 50,000. On the upside, the best we're expecting at the moment is a move to basically retest recent resistance at 64,000, but the missing ingredient here for the bulls is the way that we need to get back above that 50-day line. Next market is gold, and here we've had a definitive breakout, breaking through that May resistance line and the 50-day moving average, 23.52 at the moment. Above that, looking for not only 2400, which was the initial June peak, but also the record highs through 24.50. You can see the big picture target here as high as 2600, which is the top of that rising trend channel from December. But even if we are in a hurry, probably we wouldn't expect that to be seen until the end of next month. The stocks are next, and it really has been the Avacta show, for Avacta, and was the first stock we look at in the small cap area. The story here started with the break of that falling wedge there near 40 pence, that falling wedge from March, April, and then the initial target there was the 53 level, which is the red April resistance line, then 63, then 67 to fill the gap down from February, and an end-of-day close, or perhaps an end-of-day close or two for Avacta could take us up to the ultimate target here as high as 88 pence, the old July support from last year and the current position of the 200-day moving average. But even if we failed here, which would be a gap close situation, probably looking for this market to remain above the 60 pence level for the near term. Onto CapEx, which has been consolidating in the right way, in the right place over the last 2 to 3 weeks. Magically, that initial target there, 0.18, has become the new support for this market, and you could argue it's a little bit of an aggressive signal, but you could argue that we've broken that resistance line there from last month around the 0.21 level, and above that, looking for not only a retest of 0.3 pence, which was last month's peak area, but also as high as 0.42 now by the end of this month. Obviously, it's a punchy call, but it's been a punchy stock in the recent past. Plus, on the retracement, we've remained above RSI 50, which is normally a decent sign. Bit surprised that there hasn't been more follow through on Contango. We had Bear Trap Island reversal, so gapping down there in March and gapping up back in the middle of last month. That's normally the strongest signal around. Ideally, we don't really have any pullback lower than the Thursday, Friday support area around 1.4 pence, and then flip to the upside looking for 2.5 pence, perhaps as soon as the end of this month, but obviously it's a little bit early days on that. We had an RSI 50 rebound, and also we had support above the rising 50-day line. So everything in place there, apart from the actual move to the upside or the continuation of the recent move. On to CMET, otherwise known as Capital Metals, and it's interesting here we've had multiple failed gap fills. The gap there, the gap floor there around 1.5 pence, and the lows of recent days managed to avoid that. It'll be very interesting to see whether we can't flip up now and get our 2.5 pence target while there's no end of day close back below 1.5. Good risk reward situation there, if nothing else. Haven't looked at Cizzle for a while, and here you can see that it looks as though things are shaping up quite well. We've had a bear trap gap reversal, so that was the first signal there. V-shaped bull flag, as I call it, or a U-shaped bull flag, rising 50-day line, and then a breakout there through 1.8 pence. So we've got like 3 different positives there. In fact, 4 if you add in the rebound above RSI 50, and 5 if you add that this is potentially a rebound within a broadening triangle there from back at the same time last year. Initial target here, the 200-day line at 2.03 pence, but looking for as high as 2.8 pence by the end of next month. It'll be interesting to see if there are any fundamentals or any news that comes in there after the breakthrough 1.8. Ideally, we stay above the 50-day line, 1.65 pence. Next on the list is critical metals, which obviously has been battered and bruised in the recent past, but just the first sign that we've got a rising trend channel base. If you're really optimistic, you might say actually the top of the channel there is as high as 9 pence, but I think that might be a little bit optimistic at the moment. But looking for the shares to hold that uptrend line from March. That's at 5p, and give us a quick end of day close above the 50-day moving average at 5.8 pence. Hopefully then the target would be up towards the 7 to 9 pence level over the next 4 to 6 weeks. On to a stock which I hardly ever look at, which is always nice, Directa Plus, and here it looks as though we've got a broadening triangle base. We've got also a gap fill, end of week gap fill, so we closed above that gap there at 19.7 pence. Initial target here, 22 pence, and then after that looking for 27 or 28 pence by the end of next month. But that gap close buy signal interesting for Directa Plus. On to eco buildings, where the first building has been exciting for the bulls. We gapped up in the middle of last month, maybe on anticipation of such news. Failed gap fill there, so that's a potential CMET type turnaround or rebound. And we've broken through recent resistance at around 14.25 pence, looking for 17 pence over the next week and up to 21 pence by the end of the month. The other point to note is that we haven't been above the 200-day moving average there for a long time, basically this time last year. So an end of week close above the 200-day line is a positive, as is the RSI rebound above neutral 50, or actually on neutral 50. On to one of the stocks of the week, and one of the better calls here as well. Avacta and Helium One have been absolutely fantastic here at the Bulletin Board Heroes. The picture now is that we've broken that resistance line there from February that we were looking to break around the 0.9 pence level, and above that we were looking for 1.35. Looks as though we might get a bit more than that. Next level up above there, really up towards retesting April resistance at 1.75, but let's go for 1.35 first and hope that the shares stay above the top of the gap there at 1.03 pence. Bullish divergence adding to the mix, and most of this has been anticipated very well here in this video. On to the last two. First one, a stock I don't normally look at, but just the first signs of salvation here for S4. The reason for the inclusion is that one, that we've managed to have a weekly close above the 200-day moving average for the first time since March. That 200-day line there around 51 pence, and if you look closely, you can see that we've broken through the initial July resistance, and looks like we've also had a gap higher as well. But the main thing here is that we've broken above the 200-day line, and above that, looking for the top of the rising trend channel there at 67 pence by the end of this month, or hopefully much sooner than that. I think there's been Directa buying there in the mix, and there's also a gap to fill there at that same level around 67 pence, which is obviously the same level as Avacta had its gap. Finishing off with Synergia, which has been frustrating to say the least, but it looks like the shares are finally on their way. Perhaps the only missing ingredient here is that the 200-day line needs to start rising as well. We've had a rebound off a rising 50-day line, and we've had a breakout through recent resistance around the 0.13.5 level. Looking for the shares to hit the top of that rising trend channel from the this time last year as high as 0.21 pence by the end of this month. That would be a nice scenario, especially given that it's been backed by a bounce for the RSI off the neutral 50 level. That's it from me today. More updates during the week.